everything is going to plan if you've been following along with the channel's updates. So looking at Bitcoin, it has been a while, but the last update we were up here after meeting this 1618 target, and what I was suggesting is that we come back to hold these moving averages. If you want one more push up, we need to hold these moving averages. So we set these place of fibs over here, and we see that we bounce off the 0.5 Fibonacci. You could have come down lower. As you could see, at the time of coming down to the 0.5, the 200 EMA was very nicely on the golden pocket over here, so it was basically allowing you to come down a bit lower, and that still would have been fine. But what we were anticipating in that update was that we come down to test this previous resistance as support and then have one more bounce up, and we got that bounce over the weekend over here. And what we could then say is that this dead cat bounce or whatever is completed, and then the next step is, will we break the high here or will we break the low here? So these levels that I'm going to read out are very important. You must note them down on your chart. So that is $27,200. That is these wicks over here. If this is lost, we can see the range that we've now created over here would be breaking down, and so continuing a potential downtrend, as this would be the new most recent high. And if we're going lower than this point, that would mean we have lower lows. So from here, high, low, lower high, and lower low if we come down lower than $27,200. But equally, if we see a break of $28,250, this is how we get this continuation to the upside, where we've been talking about the last few weeks, how we could go as high as 29, 30,000 and it still wouldn't be good enough. So me saying that is just showing you that that is the range high over here. You don't have to get up to that. It's just, if we're going to create a lower high, it's going to be in that area. That's the highest point we'd create, as we see to the left over here. A lot of resistance and support, and resistance over here, support, resistance. So that is essentially where we could, if it breaks this high, that's where we would top out. But again, as I showed you, when we topped out over here, it was a 1618 target. So all we need to go ahead and do is lose that 27.2k and start trending lower. I will be here to update you guys further, so don't you worry. What I'm going to finally do is place a fib from the low over here to the most recent top right there. So we can see the lowest point of this whole entire range down at 25,000, and the peak here at 28k, so a nice 3k range. And it's saying an area of a lot of importance is this previous resistance here, where we see resistance, support, support, back as resistance, and then reclaiming it. So if we were to lose that 27.2k area, we could see that we're losing that 200 EMA. If I zoom in a little bit as well, we can see that if I'm going through these bodies, we've had a break of this ascending support over here. You could have just used the 55 and we can see that is lost as well. So it's coming down to that moving average last layer of defense. But again, it seems as if we're targeting that 26.5k range over here as a previous area of resistance and support, just to come down and retest as support, as again we've lost this most recent body support, the 55. You do have that 200 EMA, that 27.2k. Could we hit it and then bounce back up and get that one last push into 29k? But would still expect something like this to follow, but it could just all be happening from here, as we've lost this trend line and moving average. And then yeah, losing this would essentially say, if we're losing the 200 EMA, this deciding the trend. As you are below it, we continue lower. If we get above it over here, we go up. So coming back under would look to continue a downtrend. The layer of defense stopping that is between the 200 EMA and this 26.5k area. So as we maintain that, there are still chances of going up, but understand, if we do go up, it's eventually coming back down. So overall, in the midterm, we should be expecting further downside. I still believe that we will break this 25k low. I'm not seeing any signs as of now to suggest that we are going to break the 30k high. There are chances, again, you come down to here and have one more push up, but it's just into resistance. Something humongous needs to happen to push through and hold it as support to flip this bullish. That's why I think that at the moment, as we had such a big wave down, we're correcting back up into those key levels of resistance to eventually sweep this low, maybe forming a head and shoulders pattern, or maybe just a double top over here. Because with these two tops, although this is the highest point on other indicators, There's showing bearish divergences on the daily and the 5-day, maybe even the weekly. So things that we can't really ignore, and those things could take months and months and months and months to play out. It's already been since July that we were up here, and we're now in October, and we're pretty much not that far away from that price point, maybe like a $4,000-$5,000 difference from here. So it's not that major, but it's because it's setting up the move. We can't just continuously go down. We need to hold the support, which we did. We formed a higher low, so it's giving us one more chance to come back up. And then we need to prove that this is a lower high underneath 30k, which we are, and then of course lose this midpoint, which is our golden pocket, and then do something like that where we come down more towards the lower ends of $20,000. Guys, I hope you enjoyed today's video. So don't forget to like, subscribe, comment, and share this. I would love to see more of you guys joining the community, whether it's as a student or joining the Discord for those weekly group mentorship calls where I teach you how to become a self-sufficient trader as a group. You can get this one-to-one, so it's more specific to your wants and needs, and we'll make sure that we 10x your learning curve and make you into a self-sufficient trader that's protecting money, and while protecting money you're going to be making more money. And I teach you all the criteria needed, so if this criteria is not fulfilled, you're not taking that trade. I have 25% off for the next 2 people that want to do the one-to-one work with me. You're going to get 3 months free in my chat. You're also to get those group calls, my investments, but you're also going to get my 6-hour-long free course. So that it's not free, but it's going to be free if you take action on the 5 to 10 hours of one-to-one help, and included for free 3 months in the chat. So this is my 6-hour-long course, which you'll have for the rest of your life. And then we do those 5 to 10 hours of sessions in about a 1 to 2 month period, and then you have all the tools you need. You just need to stay dedicated, disciplined, and consistent, and over the years you will become a self-sufficient trader. You just need to constantly go at it and never have that give up attitude. You have to always be consistent and always have the belief that you will achieve it, because you have all the tools that I have. You just need to memorize it pretty much. And that's it from me today. So if you want to do that, links are in the description down below. The next 2 people for the mentorship option get 25% off. I will do a discount on the course as well. Just need to private message me or go straight to the website and join that Discord community. Cheers.